Today, Mark, as you know, we're asking the one MLive question that everybody wants to understand. We've had some great questions about the 60-40 portfolio. We've had great questions about whether equities and bonds move in tandem in 2023. What's on your radar for 2023? Or what's not on your radar, I should say?
What's not on my radar? That's a more difficult one. Look, I think 2023 will be another very tough year for equities. I know that it's very, very rare, and there's been a lot of research pieces going around about this at the moment, kind of circulating the street, that it's very rare to have 2 down years in a row for stock markets. I think it's something like 4 times in the last century that's happened. But unfortunately, this era bears parallels to specifically those periods, and the most recent ones were the kind of the fallout from the dot-com bubble, and I still think we're in that kind of era where we're seeing a kind of re-rating of over-expensive tech stocks again right now. And like that era, we saw the Fed hold rates quite high even as inflation come down. I think that'll be a theme next year. And the other most recent period where we saw 2 years in a row of negative stock markets in the US was 1974, so the mid-70s, again, when we were deep in that inflation narrative, and the Fed really struggled to understand exactly what was happening with inflation, and they got it wrong. So I think that 2023 is going to be a tough year, but I think that by the end of the year it might start getting a little bit more positive again. I think probably the pain is going to be front-loaded, maybe not in the first quarter, but by the second quarter is when we'll probably see the height of pain for next year. I am in the camp that I am in the Fed's camp that they will not be cutting rates aggressively like the market thinks. I think they'll be holding them higher, and I think that's generally the theme we're going to get, that central banks are going to stay a little bit more hawkish, not because the market is wrong on expecting inflation to come down, not because it's just the fact that they underestimate central banks' resolve to be very strong against inflation.
Yeah, and Mark, I guess I was going to ask you, if you look back at 2022, there's a lot of things that surprised the markets. I feel like we lived through a decade because of the markets and the news flow. But if you look at 2023, is there still a chance, and I don't think you probably think this, but is there still a chance that inflation comes back down as quickly as it came up?
I think inflation can come down very, very quickly. I think historically it has. I think there's 2 things to say. I think, first of all, every prior period when it's come down very, very rapidly, almost every single one, it has coincided with recession. And I think that's a likely scenario next year. So I'm not discounting the idea of inflation coming down extremely rapidly. I'm just saying that if it does happen, it's because we're probably going to have a much more painful growth slowdown than is expected. And I think that'll still be negative for stock markets. And that's why I think bond markets are very hard next year. It's very hard to get the risk reward. But I think it's very clear that stocks are probably going to fall in whichever way it kind of works out. So that's why I think that the view is clearer in stocks than it is in bonds for next year. And the other thing I'll say is that if inflation doesn't come down super rapidly, if it just comes, it'll definitely come down to some extent. If it just comes down but stabilizes above target, which is also very likely, I think the Fed will not cut rates quickly as many people anticipate. I think people have been overly programmed to the idea that the Fed rushes to the rescue whenever there's a little bit of an economic slowdown. But that's during the last 15 years when we've been worried about deflation. We no longer have that worry. They no longer want to stir up animal spirits, so they will not concede too quickly.